Hello everyone and welcome back. My name is Greg Furman and this is the Forex Weekly Outlook for the week of April the 22nd, 2019. Now, to get started this week, we're going to begin where we always do with that very important US dollar index. Now, we've had a fairly big move up in thin illiquid market on Thursday, but I will point out that VantagePoint was well ahead of that move by at least 2 days here. We've got our medium term crossing our long term predicted difference. We're followed that up with the neural index, and again, our predicted RSI holding above the 50 line and more importantly now breaking above 60. Now, my only concern with this is we've seen some fairly large moves on the final trading day of the week over the last couple of weeks, often to only see it reverse the following week. Now, in this particular case, the dollar should continue to hold its gains. The dollar is usually strong at the end of the month and the first week of the new month. So maybe a little bit early on this dollar rally. But we can assess that last month, March the 20th, this rally started at virtually the exact same time by the exact same signal. So we'll look for further dollar strength, but again, maybe a little bit of a too much of a move on Friday in my respectful opinion. So it's going to cool off a little bit on Monday being a bank holiday also. When we look at this, our long predicted here, the area we really want to watch for support, 96.78. Providing we hold above that, then the dollar should continue to rally. Now, that's going to put a little bit more down pressure on gold for probably another week or two, but again, well within the broader range here. Nothing really has changed much when we look at this. You can see that we had this very significant level at 1284. We're closing slightly below that, but we have additional verified support down to 1259. So that we know the US dollar does not go straight up and it doesn't go straight down, and neither does gold here, guys. It goes back and forth within the range. So the overall range here, at least as I see it, essentially 1259 to the upper part of this range, which comes in about 1356. We buy the bottom and then we sell the top until such time as the broader range breaks. Now, the indicators from VantagePoint are still pointing lower on gold. We're getting mildly oversold, but still, I think, a little bit of room to move to the downside. Now, when we look at stocks, once again, we're in a very well-defined range here. Once again, we've got this all-time high sitting up here at 29.53. We still have the potential to move towards that area, but there are a couple of fundamentals that I find very perplexing in the market as of late. The fact that dollar US-Japan, the US-Japan Forex pair, mirrors the S&P 500 contracts. When one goes up, the other goes up. When one goes down, so does the other. Dollar yen has been very, very stubborn. I'll talk about that in a minute, but I believe that there is an underlying reason why dollar yen can't break out to the upside, suggesting that sellers are getting ready potentially to take hold of the equities. Now, I can also see that in the oil markets. We've got this massive resistance that's formed over the last couple of weeks, and that area, of course, is coming in at or about the 64.71 area. We're simply unable to break above that. The indicators from VantagePoint are warning that oil is getting ready to turn lower. That is an intermarket correlation that we absolutely want to pay attention to. If oil plummets, that would suggest US-Canada is going higher, Aussie-US, New Zealand-US are going lower, a number of different, Great Britain-US lower, a number of trades can spin off of these direct intermarket correlations. So we always want to keep an eye on that. Now, as we move into our main Forex trading this week, of course, the first one we're going to look at, the one we always look at, is Euro-US. Now, with Euro-US, what I'm seeing, what I've talked about in the live training room with VantagePoint and with my own direct clients too, is this verified resistance zone that we have sitting up here at 113.24. I'll point out again the similarities. We've had a big move up on Euro-US a week ago Friday, only for it to fail the rest of the week. Now, in this particular week on Wednesday and Thursday, excuse me, we've taken a big move down in Euro-US. And, once again, This move was predictable, guys. We've got our VantagePoint verified resistance zones here, followed by that medium term crossing over the long-term predicted difference. That occurred on April the 15th. We can see that last month it was almost the exact same signal on March the 21st. When we look over here, again, we can see it on March the 26th. In February, we saw it on February the 4th, but this signal from VantagePoint is very seldomly wrong. It's taking the correlation, or excuse me, it's taking the strength of one trend, the medium-term trend, and pitting it up against the long-term trend. When we combine that with the neural index, we see we get a very, very powerful signal. All of our indicators are still pointing down. My only concern is holiday thin illiquid markets, whether this can continue. But once again, guys, there is no trend here. We are still well within the defined ranges between essentially this lower end around 111.84 and the right now the upside is 113.24, but the broader range still is closer to this 114.46 area, and the longer term range top 115.14. So right now, still a bias lower. Our AAA cross is completed. We've got resistance starting at 112.55 to 111.65. And if we bring it in our long predicted, we can see we've got significant resistance at 112.61. So if we want to look to start shorts, that's the area we would look at, but just make sure that all our stops are above the 113.24 area. Now, Euro US's counterpart, which is of course US Swiss franc, this rally looks like it's starting to run out of steam here as we approach this very significant verified resistance zone. Now, the verified zones in VantagePoint, they will go back years if they have to to find these verified zones. And right now we've got some pretty significant resistance that's coming in around 101.28. That level has been taken out, but we have additional resistance up to the 101.67 area. Now, when we look at the VantagePoint software too, the one indicator here in the software, which is the medium term crossing the long predicted difference, is very, very slowly starting to turn down. We're at 94.6 on the predicted RSI. So once again, the second that neural index goes from green to red, that would indicate a counter trend short would be very, very viable. Now, when we're looking at this, again, sorry about that, guys. When we're looking at this, again, we're looking for not necessarily a trend reversal, but a corrective move lower. 1.0045, which is the VantagePoint T-cross long, this would be our retracement point. And as you can see, the further the market moves away from it, the more likely it is it's going to come back to it. We saw a very similar signal here at the beginning, latter part of about the beginning of March. So we'll see what transpires. But again, there is cause for a potential pause in this market. But what we really need to get this one moving lower, is of course stocks moving lower. Now, with pound dollar next week, once again, we are coming into a very, very significant support zone, which we need to be mindful of. 129.54. If we can break below 129.54, 2 days in a row, close below it, then we go to our next target level. That's going to be down around 127.73. It looks like there's a very, very good chance that that could happen, but I suspect we may see a corrective move higher first, back towards the T-cross long at 136.66 before we get that next fall. But again, the indicators from VantagePoint are all pointing lower. Now, when we look at the dollar yen, what I've stated to my own direct clients, and I'll state here too, it's been a very, very long time, if ever, I have seen the US Japan move in such a small range of only anywhere from 10 to 25 pips on a daily basis. We've stacked all up against this swing high that swing high at 112.12. We got that on March the 5th. We haven't been able to basically break through that area. So we're back up here again. We've stalled. Now, all of the Japan cross pairs, Euro Japan, CAD Japan, Great Britain Japan, Swiss franc Japan, they all sold off last week, guys, and dollar yen still sat here. So those cross pairs could be a leading indicator, not just that dollar yen's going lower, but potentially the S&P 500 and the global indices are going lower also. We don't have confirmation of that right now. Our predicted differences are moving lower, our RSI is pointing lower, but our neural index is being incredibly stubborn, and it's holding on the positive side. So when I look at the VantagePoint long predicted, one of my favorite strategies, we're looking for a breakdown below 111.92. But we need a close 1 or 2 days below this blue line. That will give us the green light, not just to short dollar yen, but potentially to short the global equity markets and the additional Japan cross pairs. Definitely one to watch there. Now, with our three main commodity currencies, we've got US Canada, Aussie US, New Zealand. They all fall into the grouping of commodity currencies or equity-based currencies. Right now, we have been playing a strong range, and in the live training room and with my own direct clients, we've been buying off this one anywhere above 132.50, the range bottom 130, 132.51, but we've predominantly been buying off this lower part down in this bar here around 133 and 132.74. So we're going to continue to monitor this, but what I will point out here, guys, is that we have significant resistance up at 134, the first verified zone, and additional resistance that goes all the way up to the basically just below the 135 area. So we could interpret this as a sell zone up here. Just be very cautious with this pair. We have the Bank of Canada coming on this coming Wednesday. I believe that will be the trigger that sends US Canada significantly higher or significantly lower, and we will range trade up until that time. Now, we also could get into a scenario where they buy the rumor and sell the fact. If they're buy the rumor, sell the fact, what I mean specifically by that is that they'll buy Canadian dollars ahead of that announcement, which could basically keep US Canada within the range. But they could also be prepared for a very dovish Bank of Canada and start buying this thing right away. So our key support level from VantagePoint, 133.59. We want to watch that area very closely. When we look at our long predicted, that's coming in at 133.69. So that's a little bit of a buy zone down here. And I will say the additional indicators from indicators in VantagePoint, the predictive ones, are all pointing higher. Now, with Aussie US and New Zealand US, they are very much tied to the US Canadian trade. If US Canada breaks out to the upside, then Aussie US and New Zealand US will likely follow to the downside. That's the inverse correlation that we're looking at. Right now, as I've talked about this verified zone on Aussie US at this 72.06 level for basically the last 2 months, guys. That this is a verified zone and it has been in place for essentially 2 months. Any move towards this 72 area has met with strong selling. We have additional resistance up to the 72.95 area. So I would say that the sell zone is between 72.95 and the 72.06 area. But again, we're still holding and pivoting off this T-cross long. We need to break down below 71.13 to get this thing really moving. But another way to look at this again is looking at that VantagePoint long predicted, the long-term crossover using the predicted moving average only. So if we look at this blue line, if we can break and close below that 2 days in a row, dangerously close to that now, that would suggest a bigger move is coming. Our predicted differences are confirming that along with the neural index, but we're not breaking below the 40 level to show momentum. The RSI is one of the most powerful momentum based indicators, but we always want to make sure we're combining it with the additional VantagePoint predicted indicators. So right now, definitely a bias on this pair while below that all important 72 level. New Zealand US has already made a significant move down here, but we've paused here. We're going to see a new trend line come off this low area, 66.65, but that is a new low as best I can tell here for the year. Well, maybe not for the year. Let me have a quick peek at that. No, technically we've got additional support down here at this 65.24 area. Right now, it looks like New Zealand US is going to try and head to that area, but once again, when we look at the power of the RSI is no longer pointing down. There's a little inverse check mark here, and now it's starting to point back up. So we've got a verified support zone. That level comes in specifically at 66.65. If this area continues to hold, then we're likely going to retrace back to the T-cross long at 67.54, where we would likely be sellers again. So relatively thin docket next week on the economic data side. Canada's the one to watch with the Bank of Canada on Wednesday. I believe that's going to be the trigger, and most action will be in the Canadian US-Canadian pair and the Canadian cross pairs. So with that said, this is the Forex Weekly Outlook for the week of April the 22nd, 2019.